Good morning, everyone. Once again, this is Black Forest coming to you with another pre-market analysis video. This morning, we're going to be looking at USDJPY. But before we get started breaking down the Forex pair, we have to state that this video is for educational purposes only. This is not financial advice, but we all know why you're here to find good education that can improve one's finances. So, with that stated, let's go ahead and begin. Now, we didn't post any videos yesterday due to the presidential holiday and the American markets being closed, Canadian and American markets being closed. So today is actually almost like the first official day of trading for this week with all markets being open. And with that, we're going to take a look at the USD Japanese yen. Now, fundamentally, USD is still in a state of inflation, and so is Japan. So that means that the yen is weak and the American dollar is still weak. So fundamentally, being that both countries are still in a state of inflation, both of the currencies are relatively pretty weak until their respective governments do something to try to cartel this inflation. But until then, we'll be in a perpetual state of weakness. Now, the only thing that can really cause uh, the chart to move significantly up or down outside of these range extremes. This is like our upper extreme of 116, and this is like our low extreme of 113. And we've basically been bouncing there since October, really in this range. Now, the only thing that can really kind of break this range is if we have a fundamental shift in the USD or the JPY. Not looking for one to become significantly stronger than the other, but we'll be looking for one to become much more weaker than what it is. And that will actually cause the charts to either can go up or go down. So what will cause it to go up is if JPY became much more significantly weaker than what it currently is. And what will cause it to go down is if the USD became significantly weaker than what it is. Now, from a technical analysis standpoint, there is more of a greater chance that we'll be doing what we've been doing since October, which is going up here, coming down till we get to this area here, and then bouncing off here or in this area here before continuing to go up. So you can either ride this sail all the way down here or wait to get down here and do the buy, whichever one makes you feel more comfortable. Me personally, I am not a fan of trading ranges because at any given point they can break out of that range and you'll be stuck in your position. Okay, now let's say we do have the small chance that we have the fundamental shift in our currency strengths in which they do become perpetually weaker than the other. If JPY was to start to become much more weaker than what it is, we would have a significant shift up, pathetic push down, little range up, and then we'll break this 116 price. If the USD became much more weaker than it is, then we'll have a shift down. Price will go down very smoothly, pathetic weak push up range, and then it will break the 113. But the most likely scenario is that we will continue to go down until we get about in this area here, and in this general area, we'll have a price reversal. And we'll be bouncing almost like a ping pong between these two price points. Okay? And like I said, until the American government and the Japanese government step up and try to start making monetary policies to fix the inflation, from a trading standpoint, we're almost in a state of purgatory with this currency pair. I would really want to touch this, but if you're brave enough, good luck with that. Happy trading.